Okay, I think that we can start now. So today is module 6. This is the last module for the workshop. As you can see, well, first the question is, can everyone see my screen?
Yes, I do.
Hello, Victor. Yes, we can.
Yes. Okay, thank you. So I will stop my video. So this module name is Projecting Your Financials. This is like basic module for letting you know and giving you some steps that you can check in your company to get information about your financials and to see if you are doing fine or if you need to check something related to this subject. So for those who were not with us for Module 3, my name is Victor. I presented that module, I think that it was 2 weeks ago. I live in Canada. I'm a software developer, and I think that everybody knows me right now in the call. Something that is important and is the same message that I deliver on Module 3. The content of this presentation is provided for educational purposes. The more when it's related to financial and advising. So this is only given to you for these purposes, for educational, but if you need any assistance or any guide in this information, you should contact one financial advisor in this main subject. Let's begin with the learning objectives and benefits of this session. So we have 3 main learning objectives for this session. The first one is one checklist to make the right assumptions related to your financial status right now and your company's financial status. The second one is identify the financial risk and how to mitigate them. We will be checking some of the risks that you can have and maybe a couple of solutions that you can use to tackle those risks and or those issues that can appear. And the final one will be identify common pitfalls on your business plan. The idea of this session, it will be 45 to 50 minutes. We have one person in the call that wanted the last session to show his website. So we will give him 10 minutes at the end of the call, and he will be showing us that content if it's possible. So the agenda for today, the agenda for today, or on the points of for discussion will be how to work on your financial assumptions, identifying them, as well the forecast for a capital requirement. Here we will see what are the requirements and the assumptions that you may take and how can you get funding. We will be checking some funding strategies, and we will finish checking the risk assessment for your company in the financial area. So for beginning this, we will begin with the work your financial assumptions. And in here, it is important to say that all these assumptions come from your income statement, and also you have to check the estimates for that will become your financial drivers. Some of these are the ones that you can see on the slide. The first one is the operating expenses. So in here, you will have to check how much are you expending on marketing. If you are doing any research or development, what is the cost of this, or what is the expense that you are setting for this field. Same thing for the administration. So in the administration for your company, what are the expenses that you are handling in this area? The second assumption that you will have to make is the cost. This is divided in two. You have the direct cost and indirect cost. So the direct cost will be the materials that you use for your process, elaborating your services, and how much do you spend in the labor. So that will be that will involve your payroll and every single expense that you do with your employees. And the indirect aspect of the cost will be the distribution and the sales of your service or product. One of the third one of the financial assumptions that you will have to check is the revenue. So how much are you getting from revenue? And that will be the money that you are getting from selling your products at one price. So you will get that amount and you will know the revenue, and you can make assumptions with that revenue that you are getting. The fourth one is the fixed assets. In the fixed assets, you can check everything that is related to the company based on location. So, for example, do you have an office? Do you have equipment? Let's say in this case of Corona, how you are handling those assets, those fixed assets. You were renting an office, and right now everybody is working from home, and you are overpaying that office that is not being used. So those are the kind of assumptions that you will have to begin to make, or if you are not doing, I think that most of you are doing this, for checking the financial status of the company and for getting a status on how is going to be your cash flow and everything, not everything, but based on your financial statement. That it's something that we will see in the next slides. And finally, in this assumption, something that you will have to check as well is the working capital. That it's compounded by the receivables that are the payments that you will get from the customers that you are selling your service, and the inventory that you have in case that you have inventory. I know that most of you work on services, but it's important the term inventory in here for the whole assumption and for the whole calculation of these cash flows and these formulas that we will be checking in a moment. Now, for work your financial assumptions, we will have four main aspects that we will need to check. The first one is the revenue. So you will have to check the revenue that you are getting. How can you check that? Have you evaluated your growth based on your competitors? Do you know if the revenue that you are getting it's the right one based on the price of the market? How is the industry where you are right now? It's growing or it's in decline? You can check a lot of these things. Also, there is something pretty important here, and this is a question that mostly nobody does, and it's important. Do you know how much or your company is paying for getting one customer? I know that when all the companies begin, they get the business or the projects for referrals. But if you want to advance and if you want to get more clients, you will have to begin with a strategy to get those clients to know you and to be visible for them. So have you ever measured how much does it cost for your company to get one extra client that it's not coming for a referral? So that it's pretty important, and that it's something that I will say that it's a good thing to do and to have in mind for checking the revenue. As well, the churn rate. So the churn rate, it's the percentage in a year, the average in a year that the employees are with you or they are leaving. So how long an employee stays with you? Are you checking that? Have you any measure about that? Do you know how that impact your cash or your income or expenses in your company? That is something pretty important, and that it's in the financial assumption for the revenue. For the cost, it's pretty important as well to determine how much does it cost to deliver a product or a service for you here in Canada. So the idea of the whole workshop is to make the first step to getting into the Canadian market. Different to this workshop, have you measured how much does it cost to get your product or service here? Do you know, for example, if you have to come here or if you need to send somebody here to show your project or your service, have you ever think on how much do you have to spend on that? So that it's related to the cost, that it's something that you will need to check. There is another issue with some companies that they incur in some costs that they never measure. One of these is, for example, the website operating cost. Let's say that you have a website, you have the hosting for that website, do you have the domain for that website, do you have the SSL certificate for that website? That per year is around $200 to $250. Have you included that cost in your financial assumptions? Are you checking that and you are getting that as a cost in your systems? Same thing for any subscription that you may have. Let's say that you're a digital firm. If you have the Adobe Suite, it's, if I'm not mistaken right now, 90 Canadian dollars per month. It's almost $1,000 per month per year. So are you including all those expenses, and are you aware of all those costs that your company are having? So this is something that if you are not, it's important to check, because maybe your cash flow is being impacted by this and you were not aware of that. The third one is the operating expenses. So it's similar to the previous slide that I mentioned. In here, you will have to check your payroll, the marketing, insurances, legal fees. If you are renting, if you are, for example, a video game developer. So if you are going to be in a sales commission, or if you are going to be on an exhibition, do you know, or are you getting or saving money to go there and not being impacted in your capital and in your cash flow? Are you thinking or planning at the beginning of the year, okay, I will make these actions to try to make bigger or to get into a new market as the Canadian one? And are you making a budget or a cushion for trying to success in all those objectives? So this is something that it's important to check. If you are doing that, great. If not, well, I think that it will be good, and you will see a lot of improvement in how your cash flow is working in your company. And final, the capital. So capital, as it mentioned, the slide, it's the assumptions that you are making about capital to be operating in Canada. Oh, sorry, my bad. So in the capital is pretty important to check your cash flow. I know that I have mentioned cash flow several times now. I will explain it in a moment. But in this section, it's important for you to know how much cash are you getting and how much cash are you spending? Are you getting a positive balance each month? Are you assessing that balance each month? So we will see in a moment, but in this section, it's pretty important to have the cash flow balance for your company ready and make assumptions and planning based on that cash flow balance. The next, after explaining this, the next step that we will check is the 5 financial indicators to monitor your company. For this, we will make a poll with the same system that we have been using for the other workshops. You can find the link in the chat, and please try to answer as honest as you can based on your current situation. And maybe this will work for you and help you to check the current situation of your company based on the questions that we will make. So the 5 financial indicators to monitor are the growth, the profitability, the liquidity, the leverage, and activity. So we will see 5 questions. Each question belongs to one of these indicators. So the first question, is this one. Are your sales and profits increasing or decreasing year over year? And if is there a trend? So in here, if all the time they are increasing, try to check the last 2 years if you have more than 2 years on business. If not, do you think that the year that is coming, you will be increasing your profits or decreasing based on that information? Okay. Let's wait a little bit for somebody else to answer. Okay. So we have variable 50% and increasing 50%. So nobody's decreasing. That is good. That is a good projection.
Good for you guys. Yeah. Great job.
So that is for the growth. So it seems that not all the companies, the 50% of the companies are increasing the profits, and the second 50% is variable, but nobody is losing money so far. So that is a pretty good for the measurement that we are doing. The second question is your business making enough profit compared to other similar companies? Have you ever measured if your profit is the same or better or worse than your competitors? Guys?
Yeah, we see it. Let's wait.
Okay. So we have, I don't know, okay. We have 3 answers and we have the same percentage for each one of them. Okay, great. So that is checking how profitable are you compared to your companies. One important thing that you can check is if you're doing more profit than your competitors, or if you are doing the same. Maybe that will give you an idea of the price that you are charging. Maybe that will give you an idea of the price that your competitors are using for the same kind of services that you can provide. So if it's lower, so you can see that maybe you can increase the price of your product and you will get something similar to what your competitors are getting. Now the third one is, in your current situation, can your company meet its short-term obligations? Okay. Okay, great. Glad to hear that. That it's about your liquidity. So you are getting enough cash in for being able to pay your short-term obligations. That can be the rent, everything related to the expenses that you have in the office month to month, and that is good. It is good that everyone has the good cash flow to accomplish and to meet all the short-term obligations of the company. Sorry, my bad. The fourth one is about leverage. And the question is your company taking advantage of financing to operate and grow? So is your company, or have your company, any kind of loan, or they are getting some kind of financing by, I don't know, an investor or anybody else that wants to get into the company? Okay, so we have 20%, 25% yes, 27, 75 no. So, okay, the leverage, having leverage is good. Some companies think that maybe getting a loan will create a lot of debt, and it's not going to be that profitable. But if you get a loan in the right moment and you have the cash flow to pay that loan, that will be pretty helpful for you for having a healthy financial status in your company. So it's good of having one, getting in the current moment, in the right moment, and or if you don't want to get any loan, you can find or look for a different type of financing that we will see them at the end of this presentation. But that's about getting the leverage that you have for the company. And the final one is about activity. And this is, how are you managing the assets of the company? Well, if you are managing the assets of the company effectively, that will be more, for example, in the case of coronavirus. So the example that I was using at the beginning, you have an office that you were renting, but right now is empty, and you are paying an extra cost because the office is not being used. Or I don't know, do you have equipment like computers that are stored because you had, I don't know, 2-3 persons that were working with you, but they are not anymore, and you haven't used those computers in 2 years? Okay. Okay, based on that, everybody is taking the right option of trying to manage all the assets as properly as possible. And that will be the main advice here. Like, if you have something that you are not using or something that is causing you an extra cost, try to check how can you use that asset to get some revenue and convert that asset in expense in an income. So that it's about the activity. So with those 5 questions, we have checked the 5 financial indicators to monitor your company based on the financial status that you are. that you have right now. So those were the questions that I had for you. Let's continue, and now finally we will check what is the cash flow. So I know that this could seem pretty basic for most of you, but I think as well that it's pretty important to remind all these terms and to get the information, the basic information. So what is the cash flow? Well, it's the cash that goes in and out from your business in a specific period of time. It has two main aspects. The first is the cash inflow, that is the cash that is coming from a sale or of a service or product that you are providing. And this is not just like right away. This can be in an altered date. So when you make a project and you let your client pay the invoice, I don't know, 30 days after you send the invoice or 60 days after you send the invoice. That belongs to the cash inflow. It doesn't matter if you receive that money yet, but you have invoices that and a payment plan with your client that gets that money in that cash into your company. And the cash outflow, that is the second one, is any cash that is leaving your company because the salaries that you're paying, the rent that you're paying, or even items that you have bought with credit card or with credit. It's something that you haven't paid completely, but you will need to pay it on the future time. So that will belong to your cash outflow. And this is pretty important because this will help you to create the cash flow balance and check month by month if your cash flow is enough to get your business afloat and to being able to meet all your obligations and getting profit from it. So the lack of cash is one of the biggest reasons small and medium business fail. And it's important for everybody to manage this cash flow in a proper way and to understand how it works inside the company. And in here, I have another question. I know that you are quiet today, but please bear with me. And the next question is, do you know how long does it take for your company to get cash inflow? So is your company getting cash weekly, monthly, random, or you have never measured? Okay. So we have monthly and random. Okay, great. So in here, we will see the key elements that you will need to check about the cash flow and that directly impact the cash flow measurement. So this, these are the account receivables, that is the money that customers owe you or your company. This is based on goods or services that you are providing and may have been not paid yet. So those are the accounts receivables. Also, you have the accounts payable, that is the money that you own to your suppliers. And in case of having this, the inventory. So the inventory will be the materials that you get and you purchase from suppliers, and you will need to sell to generate a revenue. So these are the key elements to measure your cash flow cycle, and we will see that in a moment. And it's important that you get this measurement because it will show you how many days does it take for you to get money in your company. And sometimes the results, when you see them, you will say, okay, I'm getting cash, I don't know, each 2 months. And does it help you to fulfill everything that you all the expenses that you have, everything that you need to pay. Do you need to get more cash in your business to make it better and to not asking for a loan or asking for an investor? So it's important to have that in mind. And for this, we will see how to make a cash flow budget. In the cash flow budget, you will have 4 different aspects. You will have the opening balance, you will have your incomes, the expenses, and your closing balance. And this is recommended because this will help you to check month by month what is the situation that you have in your company, how can you improve, or if you are in a good position, what are the decisions that you can make. For example, if you need to expand and if you have a good cash flow budget, what amount of money can I spend in this expansion? If I need more equipment, the same thing. If I have a good cash flow budget, how much of this cash I will spend in this new equipment? If I need to hire more people, if I will need more resources, and if you are not having a good cash flow, but you need those things, if you need to hire more people, and if you need more resources, more equipment, so how that will affect your cash flow? If you need financing, if you do, how much you will need to pay? And that is something that we will see an example next to this. And you will, it's pretty easy, it's pretty simple, and you can see that it will help you in the future to take decisions. Here we have a cash flow budget example. So in here, they have the opening balance. This is the money that they had at the end of November, and you will open December with that amount. You will measure all the total income that you are having for December. This can be an average based on your last year, if you have the measurement. If you don't have the measurement, the idea is to get the information from your previous months and try to replicate that in the current month that you are assessing. And how and the total amount of your expenses. This can be as well an average, or if not, same thing. You can get an average based on your previous months. So for example, in here, we will see that they began with an opening balance of 65,000, and the final income of the month was 5,000. So the closing balance for December was 70,000. This scenario is a scenario of a company that never used a cash flow. So the case of study says that they got a project, a big project that was paying 125,000, and they reduced the projects they were working because this was a big project and they cannot continue getting the regular projects they were getting involved. So they reduced the income in January to 5,000 because they were beginning this one. And in here, you can see that the budget, the cash flow was affected. So the expenses were the same. The income was just a few. And the closing balance for January was almost 40,000. They got the payment helped them. So you see that the cash flow increased. But in here, they stopped receiving the cash flow or the income that they were getting for the other projects. So this one was a big payment, but those the next month didn't help to continue getting and fulfilling all the expenses that they had. So if we continue and we check the next month, in here, they didn't get any more projects. So all the cash flow that they were getting was reduced. And for the month of July, they haven't finished the project, and in here their balance was in red, so their cash flow was negative. By the end of September, they had to cut their expenses by half, trying to help, and they had a negative a negative balance of $76,000. So what I meant with this example, the idea of having a cash flow and checking how money are you getting, how money are you expending, how much money do you have at the beginning of the month, and if that will be enough to meet all your bills, all your payments, and if don't, what are the measures that you will have to take for not getting a negative balance? At the end, these kind of companies will need to get any financial help, like a loan, investments, or something like that. But if they show this cash flow to an investor or the financial statement, they will show a company that it's not receiving a lot of projects. They base the whole project on the previous one that was 125, but they are not getting any more income. So, and in here they had to reduce the expenses in half. That will mean that maybe they needed to fire people, and now their team is smaller, and they won't be able to get this kind of amount in the income in the future. They will have to rehire and they will have to reinvest. So it's important to have a cash flow budget. If you do it, congrats. If you are not doing that, it's pretty easy. You just need to check your incomes, expenses, and check how much money do you have at the beginning and at the end of the month. That will help a lot. Now, how to improve your cash flow? So there are 3 main steps to improve this cash flow. The first one is collect the money from your customers as soon as possible. So try to avoid those long payments, like 3-month payments, 1-month payment. I know that we use a lot to do those kind of concessions to the client, but if you can get your cash as soon as possible, that will help you a lot. That will reduce the timing where your cash flow could be negative. In case of you having inventory, so try to keep it optimal. What does it mean? Optimal is having enough products in stock that if a customer comes and asks for a product, you can deliver, but not having extra that you will need to store for a long periods of time, and that will cause you only expenses. And the third and final one is just pay your bills on time. Try to avoid any payment of interest, or for example, if there are loans, rents, anything, try to pay on time to avoid extra payments. And that will help you to improve your cash flow. Let's continue with the forecast capital requirements. And for this, everything is related with the subject that we have been talking the whole time. In here, it's important to review and to plan, to check all the time. So how much money do you need? How much money do you need in your hand? Do you have any balance that give you the assessment of negative periods of time that you are getting those cash flow? Sorry, I totally said in the wrong way. Are you measuring the periods of time where you are having negative cash flows? Was what I meant. And that's pretty relevant and related to what I just showed you in the last slide. Something that is pretty important, and that it's an advice that you can get from advisors, is getting a safety cushion. So do you have a safety cushion? Do you think that your company has a base of capital that you can use in case of an emergency? If you do, the same thing. Congrats. If not, try to get one and try to check if it's possible for you to get that cushion, to get that support that in case that you need it or that you need capital, you will be able to take it from there. So that is how to forecast the capital. Try to check what are the expenses that you have, what is your burn rate of capital, and the assumptions that you are making for the whole projects that you will have. So for that, and this is another, this is a different type of document that you can as well use, is the, sorry?
I think you're having an echo.
Okay. Is how to build your financial statements. So the financial statement is, as its name says, a statement that will show your current situation, and that will be used for a bank in case that you want to ask for a loan, or many investors will ask you about this financial statement in case they want to invest in your business. This can be done monthly and annually. So the idea is to have your accountant may use that for your taxes as well. So by the end of the year, you will have the financial statement elaborated by him. At least in Canada, is like this. Your accountant will create this document, and it's the one that is being used for your taxes. So what is a financial statement? The financial statement will show your assets. So it will show how much cash do you have, all your accounts receivables, your inventory, and your prepaid expenses. So in here, the first thing that you will show in that you will get in your financial statement will be that, your assets. You have two kind of assets. This one that are about the receivables, the account receivables that I explained at the beginning, and the cash flow. And also you will have the fixed assets. Fixed assets will say you have land, you have vehicles, equipment, buildings, everything related to that. And as well, if you have long-term investments. So it's important to check that. And every single investor that will check your current situation will need to see if you have a long-term investment or if you have a long-term debt. That is the next thing that we will see. For
And
example,
just to mention before
yep.
you move on, and maybe you're not looking for capital, right? But some companies have mentioned interest on partnerships with companies here to do business development. They will request you this, and that's the reason we show you this. So it's not only for when you're seeking capital, it's also to show a strong partnership, right? I'll let you
Yep.
move on. Thank you, Victor.
Sure. Yep. So we were in fixed assets, and now we are checking what are your current liabilities and your long-term liabilities. So in here is if you have all your accounts payable, everything that you need to pay, all your taxes that you need to pay, the long-term debts that you may have with a bank or any financial institutions, that will be in your financial statement. And finally, you will get the shareholders equity. So that is the portion of the profits that will be kept in the business. So that is the money of the shareholders that will be reinvest in the business. And that is another important information that you should show in this financial statement. You will find in the presentation comments multiple links where you can find templates of how to build that financial statement. And by the end of the presentation, I will show you one page that you can use that for me, for us, has been pretty helpful. And they have plenty of information and tools that you can use for your financial study and projections. So this was the financial statement, and then we are going to check the funding strategy. So this is what we were mentioning before. How can you get money into your company that is not coming from your sales directly? So you have the equity fund, and the equity fund is the process of raising capital through the sale of shares. In case that you have shares of your company, you can go and sell those shares, and you can get money by selling them. That is one of the options that you can use for funding. The second one could be, that is the most traditional and less expensive maybe, the debt. You can get a loan with a bank. You can ask for credit cards as well, or there are bank loans or investment banks, and you can try to check what is the rate of the interest that better accommodates to your situation. And sometimes you can get pretty good deals when you are a small or medium companies. There are some banks here in Canada that help SMS companies, and that they provide pretty good deals for people that are beginning the business here. So that is something that you may check in case that you need and that you are creating the company here in Canada. And the non-traditional. So for the non-traditional is like we are mentioning there like use creativity. So in this case, do you have, I don't know, partnerships that I was mentioning Bibi a moment ago. So if somebody wants to come and say, hey, let's do a partnership in this project, we can go, I don't know, 50-50. You don't have to put all the money or all the capital that you have to create that project. That is one that could help you. Vendors, you can use vendors. You can use leasing of assets. So for example, in this case, I make the same example. You have an office right now, and the office is half occupancy because of COVID, and you have enough space that you can rent it. So have you thought that you maybe can get money from there and you won't need to get like a bank loan? So trying to find those kind of solutions may help you to get money into your company without selling shares or getting debt. So those are the three main of them. They are divided, and they have plenty of multiple options. The same thing, and I think that it was Tufik who showed us that here in Canada we have the Desjardins investors, venture capitalists. So you can check there. And in the website that I will show you, they also have this kind of processes, and it's not a help, but it's that kind of funding proposals for companies that are getting into the market. And finally, we will finish with the risk assessment. So it is important, and I know that I have repeated myself all the presentation and say that everything is important, but it is that you make an assessment of the risks that you are doing. So have you ever measured the risk that you are having in your company or in your project? Have you measured if you lose your principal, or if you have not the principal, but the one that generates the most revenue for you, if you lose that client, what will happen with you? Do you have a plan if that happens for mitigate the result? If you don't, it's something that you should be doing, because in the case that happens, everything can become pretty wild, and you will need to check a solution, and a rapid and quickly and efficient solution for that. So in this case, and the same example that I have used in the whole presentation, COVID arrived. Has the COVID affect your business? If it did, why? Did you have a cushion? Did you have a mitigation plan? That I know that nobody was thinking that something like COVID will happen, but if you had a plan that something could stop your business to come, did you have that plan and that plan help you in this situation? So you think that you are in a good position after COVID based on the plans and the assessment that you did? If that happened, again, congrats for you. If not, please try to check everything that could go wrong in your company. The final message in here says assign an owner, so you don't have to be responsible of everything. If in your company there are more people that they can check and they can take accountability for that branch or for that sector or for that team, try to not get everything in your shoulders, trying to assign and to get them different solutions from different people, and that will help you a lot to mitigate those plans and to have an idea of how to tackle the risk in the case they appear. So that was the end of this is the end of the presentation. Here I'm going to show you the bank that I was mentioning before. We are not sponsored by them. We don't have any relationship with them, but they have a really good website and platform for companies that are in Canada or want to get into the Canadian market. They have support in different languages. If you don't speak English or French, they will help you, assisting you on Spanish. And you can get templates for your financial plan. You can get tools that will help you to evaluate your cash flow cycle. How many days does it take for you to get cash into your companies? And they have a kind of video game that will teach you the basics on how to handle the finances and the whole business plan for your company. So in the presentation, you will find all the key links to get into this page. But if you want to go there, it's pretty simple. The website is, I will put it in the chat. So www.bdc.ca. And they also provide advising. So in case you are coming here to Canada and you want advising from them, you can contact them, you can subscribe and create an account, and they will help you with anything you need. So guys, that was the presentation about Module 6. Thank you for being here. And if you have any question, please be my guest.
We had a question in the chat regarding what could be the best method to evaluate your business. Based on Canadian behavior, DCF works really well. I've seen valuation of different companies being delivering that way. It is the most old school, but Canadians are very old school on their behaviors. But also that will also depend on your indirect market. Let's say if your service solution is for farming, let's say, maybe their valuations are not as strict, right? Because your indirect market behaves differently. So I will suggest, I also send a different link on to understand the different like types of valuations. So it is a combination on the type of company you have as well. So there are certain companies, of course, that are on the market, on the stock market. They have their IPO. So it will totally depend, obviously, on the type of company you are running, right? So do your research, but based on what I've seen is this year. Now, now I don't know if there's more questions.
Okay, and do we have the participant that wanted to share his website with us? Is he on the call?
We're in the Kanasu. Kanasu, are you there?
Hello, I'm here, but we told the last week for the next week.
Oh, that's okay.
Yeah, it's for the Thursday. Please.
Okay,
All
great.
right. So Thursday, as this is our last formal session for our modules, let's say for theory, I just want to remind you all that the living document, I send that every week. Some of you are having one-on-ones with us starting next week. So please send us your specific questions, and if your document is ready, send those to us. I send you an email to those that receive my email. Send it to info@pavolabs.dev. So we can prepare in advance and come prepared to answer your questions. And we can also do our specific research, right? Because your planning and your strategies are totally different. As you know, you are a very diverse group. And our research here has been very, let's say, general in nature, but you were tasked to kind of deep dive into your own industries and your own company strategy, right? So the idea of these one-on-ones is to help you validate that information, help you answer some of the questions that you may have while answering the living document if you found any gaps or you don't know how to gather that information from any of the general links that we sent. Then we can discuss and deep dive. And then what else? Our last session will be Thursday, and maybe who was the person who asked the question about the evaluation? Alejandro. So Alejandro, maybe during that session, bring your question to see these entrepreneurs are. There's a company that is searching for capital for sure. Or that recently got capital to launch their application. So Engage Think, it's a very new startup. So they recently apply for capital. So maybe you can ask them that question. Same with the other companies or other people participating in that entrepreneurs panel. They have a lot of experience working in creating and launching small, medium companies. So I will suggest that bring those questions to them. And that's the reason we invited them, right? So you can have a perspective of how Canadian companies prepare to go to market and here in Canada, right? And you get that space to ask those questions. Any more questions? I saw a hand. Ana Maria. Tell me.
Yes, hi, how are you?
Pretty good.
So I was just wondering if we will also have the opportunity during the one-on-one sessions to ask questions about the financials.
Yeah, of course. Of course.
Okay, so I guess we gotta have them ready for, in our case, the one-on-one meeting will be next week.
Correct.
So I'm not
So
sure.
if like try to send like your business planning like a few days in advance.
Yes.
So you allow us to go through your business plan and go through your strategy to understand where you're coming from, like the industry you want to tackle here, and the main, like the open questions, like key questions you want to resolve, right? And we will try. The reason I'm asking you this is because I don't want to spend your one-on-one that is for an hour for you walking us through your questions. No, I want you to. I want us to come prepared and say like, hey, you sent us this. This is an open gap. We investigated, we discussed, and we give you a guidance or advice, right, of how to go next. So that's the reason I'm requesting for you to send us your information and questions in advance, so we don't waste that hour. Like for you walking us through is like we come prepared for like with some answers.
All right. Understood. Thank you.
Any more questions?